Okay, hi everybody. This video and the video blog is on borrowing basics. We're just going to cover some of the basics behind borrowing money typically this is going to be borrowing money from a bank or some financial institution. So here's what we're going to cover. We're going to define what credit really is. So we're going to define credit. Then we're going to just talk about why credit is important in your financial life. We're going to talk about the difference between a secured and an unsecured loan, so you know the difference between those two. We're going to talk about three types of loans. So you'll be smart when you go to the bank. You'll know exactly what types of loans they're talking about and what your options are. And then we're going to cover the costs of borrowing. Okay. So the first thing we're going to really talk about is what is credit. So let's just put this stuff in a box here so we know that's our outline for today. And we'll just come up here and we'll start by saying that credit okay, it's a typical loan is credit. If you get a loan, then you have been extended credit by somebody. Okay, so credit is money that you borrow to pay for things. So it's money you borrow, and of course, typically you're going to borrow money to buy something, right? It could be anything. It could be a house, could be a car. It could be to pay for college, that kind of thing. Okay. Now, sometimes you hear people talk about good credit and bad credit. What that really means is good credit. That's really reflective of your credit history or your credit score. So if you hear somebody talk about good credit, that means that you've made your payments on time on any existing credit that you have. If you have, or if you hear of somebody who has bad credit, that means that they were probably late with payments. Perhaps they even filed for bankruptcy. Right? Just a reminder that there's a whole series on bankruptcy under the bankruptcy title in the video blog. So typically, then, if you've got good credit, you pay on time. That means you're going to have a chance to borrow at lower interest rates, and we'll cover that later when we talk about the cost of borrowing. If you have bad credit, most often you're going to pay higher interest rates. Okay, or you may not even be able to get a loan at all. But that's really a quick study on what good and bad credit is all about and how it really impacts your ability to borrow in the future. So why is credit really important? Well, credit's important for a couple of key reasons. Why it can be very useful in emergencies. If you have a cash emergency of some sort, the ability to borrow some money on a fairly quick basis can be very useful. Credit cards, which is a form of credit, are typically more convenient than paying with cash or checks. And it could actually also be a little bit safer in that if there's any sort of fraudulent activity and that kind of thing, or if you purchase something and it ends up being a dud product, sometimes your credit card company will actually stand behind you and help you negotiate something with the person who sold that to you. Okay, it also lets you make large purchases, right? A lot of the time when people use credit, it's because they don't have the cash to pay for the whole thing now. So large purchases like a home, even a car, maybe in some cases even appliances, that kind of thing. Maybe even home improvements. If you own a home and you want to redo your kitchen, that kind of thing, you can get a loan for that. So they're typically things that you're not able to pay cash for. Okay. Now coming back to bad credit for just 1 second, I know we're jumping around a little bit. Bad credit can actually impact, if you can believe this, your ability to get a job, to get work. It can also mean it may impact your ability to get insurance, or it certainly may increase the cost of insurance. Okay. So there's more detailed videos on the whole concept of credit, but it really is the underlying foundation for the whole idea of borrowing, because without credit, you're never going to borrow. If you have bad credit or no credit, the chances of you getting a loan from a normal financial institution are pretty small. Okay, so now we're going to talk. So we've defined credit. We've talked a little bit about why credit is important. Now we're going to talk about secured and unsecured credit.